Strategy is just a fancy word for planning. Tax planning. If you plan it right, you can set your kids up. And really the government wants you to do it because it's just one less person that they have to take care of.
Welcome to Life Changing Money, a podcast all about one of the most taboo topics in the world, money. I'm your host, Barbara Strehan, and we're going behind the scenes on business owners' journeys to money, success, and wealth. Let's get started. Hello, and welcome to another episode of Life Changing Money. Today, we have a duo episode of Matt and I. He's back on the pod. You haven't been on here in a while.
No, I haven't. I've just been doing a whole lot of nothing, not working and stuff. So
I don't think people know that you're sarcastic.
that's true. I am being very sarcastic, but no, we've been very, very busy and that's a good thing.
So my husband, Matt, is our sales department. So for those of you that have ever been on a sales call with us, it's probably not me. I rarely ever do them. So thank goodness for you and taking all of our sales calls.
I mean, I'm no Barb, but I do my best.
I think it might surprise some people when it's like me on social and then they like sign up for a call and then they get on this Zoom and there's this big bald guy.
Yeah.
Has anyone ever been like...
looks like maybe like a more handsome version of Groot from, Minions, but...
Stop. Minions?
Yeah. I think it's Minions.
Groot? Isn't that Guardians of the Galaxy?
Maybe it is, but I think it's Groot too from... He's the bald guy.
I think it's Crew.
That's what it is.
Something like
Crew.
That.
I said Groot.
I don't know. Anyways,
I
has anyone ever been on the calls and been like, did I schedule at the right place?
Every day.
Really?
Not every day, but
really?
Probably like twice a week. Yeah, people are like, so do you like know Barbara? And I'm like, yes.
Very well.
Very well. Extremely well. No, I'm just kidding.
So we're going to talk today about family wealth strategies because it's something that we incorporate into our business and businesses. And it's something that we chat with all of our clients about because why build this great, amazing business if you can't share it with your family? So what do you commonly hear when you're like on calls with people, discovery calls with people, that they're like commonly not doing?
Well, over time, I mean, when I first started doing this, people were like, can I even do that? And, I think people have heard about it more and more on social media, so it's a little bit more commonplace. But even then, they're like, I can put my kids on payroll. Like, how do I do that? Or how do I justify it? But my interpretation of it, and, of course, Barb, you being the tax expert, but my interpretation of it is the government wants you to do it anyways, because yes, while it is a strategy for your business to reduce your taxable income, it gives you as the parent the ability to set your kids up for life in the sense of, college, helping them, with their down payment on their first house. If they need a business loan at some point. And if you plan it right, strategy is just a fancy word for planning. Tax planning. If you plan it right, you can set your kids up. And really the government wants you to do it because it's just one less person that they have to take care of.
Yeah, exactly. So we love, as one of our tax strategies, we love adding kids to payroll if we can come up with a job and a justification for our clients and adding their kids to payroll. But like you were saying, this tax strategy is in place for a reason. And if the IRS didn't like it, they would have ruled it illegal by now.
Yeah.
And they actually incentivize it by making it tax-free.
Yeah.
And it's on the IRS website. It tells you why you should do it. So it's funny that people still come to us and they're like, our accountant told us that we shouldn't have our kids on payroll. Or what about employment law and all this other stuff? And it's like, no, there are carve outs for it all because like you said, it's one less person the government has to take care of when we employ our kids in our business. And we can employ our kids even from when they're babies. I mean, you have to have a realistic job for them, but this could be something like a model in your social media. If you have a business that has a big online presence and you actually post and you're making money from, you know, advertising on social, so it has to make sense. But as they get older, we can add more and more jobs to their plate. Like, what are some jobs that, you know, you've seen our own kiddos do or that we have our clients do?
I mean, I was going to say, we have a client, and obviously not going to say names and, you know, tell her what industry she's in, but she makes very good money, but she has 7 children. And when she called me, all of them were already doing stuff inside of the business and they weren't being competent. Like, and it was because she just,
she didn't know how.
Well, she didn't know how, and she was short staffed. So like she had the baby, like the 3-year-old, shredding and doing like stuff like that. If I recall correctly, I could be wrong, but my recollection is that she was like shredding and doing little things like that. And I was like, if I can't help you, then I need to close up shop. Like, I need to go do something else. Like, it was mind blowing to me that, you know, she had basically an army.
Yeah, all 7 of her kids were helping out in her practice, already doing administrative tasks and already doing janitorial tasks, shredding paperwork, filing paperwork, responding to emails. There's so many things that our kids can do and are capable of that, you know, we're probably quick to say, oh, they can't do that yet, but they're so much smarter than we think, and they're really fast learners. And again, as they get older, the more and more you can add to their plate. Like, we have 8, 10, 12-year-olds that are doing social media management because they all know TikTok better than we do. 8, 10, 12-year-olds that are responding to emails, that are doing bookkeeping, you know, in terms of like scanning receipts and things like that. And so there's a lot that your kids can do in your business, and you're incentivized to do it because it's tax-free, or it can be tax-free, or for some of our clients, they pay them more than the tax-free amount, but it's still a way lower tax bracket than their parents. And so we call that tax rate arbitrage, meaning, you know, the parents in the 37% bracket, which really means they're paying 41% in taxes plus state. So maybe you're at 50% or more in tax. I was actually just at a women's event last night, and she was telling me her first year in business, she was like, I paid 57% in taxes. And I was like, well, damn, I wish you had us at that time. But yeah, you can easily be over the 50% mark. And so why not shift some of that income, and even if it is taxable, to the 10% bracket that your kids might be in, or even up to the 22% bracket, because you just went from a 50% tax to a 22% tax. It's like a no-brainer.
Yeah, I mean, you're just subtracting the difference, right? Like, if they're at the lower bracket and you're at the higher one, the benefit to you is the difference between what they're paying and what you were paying.
Yeah.
So but you know, in order to even get there, you have to have those conversations. You've got to really know who your client is. Like, it takes time. And
for you listening, you have to have an accountant that is actually a tax strategist, not an accountant. And so you have to make sure your accountant's not telling you no, that you can't do this. We make it sound very simple, but it is a more complicated tax strategy. So it's not something you're going to want to just do on your own. There's a lot of documentation and compliance behind it, but we would do all that for you. But also, besides the tax savings and besides the, you know, wealth building, it teaches your kids how to be a business owner. They're more involved in the business. They understand why mommy and daddy aren't, you know, maybe there all the time, or it shows them why they are there more than maybe their friends whose parents have W-2 jobs and they can never leave the office and their job isn't flexible. And it shows them how to communicate with clients and
gives you the ability to spend time with them. If you are super busy and you're working, especially if you're growing your business, right? If you're in that grind mode and you're working 14 hours a day, but you started your business when you had little ones, Maybe it gives you the ability to spend more time with them. And I'm not going to say that college and high school and middle school and all that isn't valuable, but I would argue that these things you do with your children are just as valuable, if not more valuable, because you're teaching them real life skills.
Yeah.
They could be doing that. I would not recommend doing your own bookkeeping, but I think we have one or two clients that do at least a good enough job to where all we have to do is clean it up. But the point I'm trying to make is, you could be teaching them bookkeeping. You could be teaching them how to do payroll, how to do invoicing, how to,
or at least the terms.
Yeah.
And like know these definitions, because there's so many business owners out there where I'm talking about revenue versus profit and gross profit versus net. And like the business owners don't know these terms, but even our little one can tell you, like, if I'm like, what's revenue? He's like, it's income before all your expenses. And I'm like, okay, what's profit? He's like, it's the money that you have after all your expenses. So like you can make it simple enough for your kids to understand, and they'll just be so much further. Like everyone talks about, why don't they teach us about taxes in school? Or why don't they teach us about finances or how to build wealth? They don't teach any of that in school. So it's up to us to do it. And this almost like is an even better incentive to do so, because not only are you as the business owner saving money in tax, the money is going to your kids, and now they're just going to be like so much smarter than everyone else at school.
Yeah. And even though my own father did a good job of setting some money aside for college, I mean, imagine if, for those of you out there that had to grind and you being an example, right? You had to take out loans to pay for your college, for your master's program. And
for everything.
Yeah. And just to live, right? Because you don't have time to work and to go to school, right? And so imagine if your parents had a strategist and had utilized these strategies early on in life, and you didn't have to go that much into debt or go into debt at all to get your education. Think of how, like, and if you do that, now you're able to buy a house sooner, right? Because you don't have, student loan debt hanging over your head. Like,
yeah. So now we're talking more into the wealth strategies of it. So we
100%.
talked about the tax part and why that's super beneficial, which, by the way, if you guys are listening, you have to sign up for our next free masterclass. We're going to have a masterclass all about how to build family wealth. Again, it's a free masterclass. We'll put the links in the show notes. It's going to be in May. And we'll go over this and like so many other things. You guys know, if you've been to one of my master classes, it's not like a waste of your time. Trust me, I've been on master classes that I've signed up for, and I'm like, why did I block this time out of my calendar when I could be making money? I don't do that in my master classes. I give it all to you guys for free. But let's take it a step further. So the tax benefits of employing your kids. Now there's also wealth benefits. So the money that you pay them is going to go into their own bank account. Mm-hmm. And you, as the custodian, as the guardian, as the parent, as the steward of their money, you need to invest that money wisely. Now, could you go out and buy them like the new Xbox and like the fancy clothes or whatever? Sure, you could do that. What I would suggest doing is taking $7,000 of what you pay them and max out their Roth IRA.
Yeah.
And why do we do that?
Well, a Roth is money that you've already paid tax on. And so...
And the cool thing is this money that your kids got was actually tax-free. So it's a double tax whammy.
Correct.
You're using already tax-free money to put $7,000 into
Correct.
a post-tax account where it will
appreciate.
Yeah, it's going to grow tax-free.
Mm-hmm.
And when they take it out, it's going to be tax-free.
And unlike a 529 or some of those other things out there, there's more flexibility with a Roth because of the fact that in the eyes of the IRS, and again, please correct me if I'm wrong, but in the eyes of the IRS, they've already gotten their money. And so it gives whoever is the trustee or the person who is the beneficiary of that Roth account, it gives them the ability to do more with it.
Yeah, like you mentioned. So when you pay your kids, now hopefully you're going to take 7,000 of it and put it into a Roth account. It's going to grow tax-free. You can take out your contributions tax-free. So that 7K that you're putting in every single year for your kids, you can take that out tax-free before retirement age. Now, once you reach retirement age, or your kiddos do, they can also take out everything tax-free. But let's say they get to college age and they do need money for college. You can take out everything you've contributed tax-free and pay for their college. Better yet, let's say they got a scholarship or sports paid for it or what have you. They don't need money for college, but now they're at an age where they need a house.
Yeah.
So you can take out what they've put into it, what you've put into it, and use that as a down payment on a house. Whereas you could not do that with a 529 plan, which is why we don't love them. Do our clients use them? Yes, but only after a Roth has been funded, because it's just so much more beneficial.
Yeah.
Now, for the financial advisors out there that are going to comment and say, but you can put money into a Roth from a 529. Okay, that rule changed only this year. And your financial advisor will probably tell you, if as a rebuttal, well, you can still put it into a Roth as a 529 plan. Yes, you can, but there is a $35,000 limit. So let's say you saved money in your kid's 529 plan their whole life. There's going to be more probably than $35,000 in there, and that's all you can convert. And so the rest of it you're going to get penalized for if they don't use it for college. So again, that's why I don't love 529 plans, but in terms of building wealth for your kids, a Roth is amazing.
Well, and if you want to get even real crazier, right? Technically, you don't have to just pay them the bare minimum. You can pay them more. Granted, they're gonna pay a little bit of income tax, but it's still gonna work in your favor. And if you really want to get super creative, you can, if the parent already has a whole life policy and you get your children a whole life policy, and granted, this isn't financial advice and all that good stuff, all those disclaimers, but you can take that money that you're paying them, get a whole life policy, and if you do it right, you plan it accordingly, just like anything else in life, you can borrow against the cash value and down payment on a car, or if you have enough cash value built up, you could buy the whole car, or you could use it for college. You can use it for whatever you want. But obviously, like cash value life insurance, if you paying that is in and of itself isn't a deduction, but because that money that you paid your children was tax free to them,
it's a roundabout way of paying for their whole life through your business. Not directly through your business, but through their kiddo pay.
Correct.
And we'll have a whole nother podcast all about other family strategies that we like to use, like the whole life policy and cash out plans and all of that. But this one is more for the business owners that are just have questions about paying their kiddos. So we talked about that, but also when you're chatting with potential clients of ours, most of them don't know how they can involve their spouse in their business as well. And so what we love to do with our clients is give them 3 different options on how they can help involve their spouse in their business. Because if they're like us, we were already like helping each other in business.
Yep.
And now we're like fully in business together. But
you already, people are like, oh, well, I don't want to give the common thing I hear from, especially a lot of my female clients, is, well, I don't know about putting my husband in the business, right? Because whatever, they have a reservation because they feel like they built it. And
they don't want to say it, but it's, what if we get divorced?
Right. What if we get divorced? And my response to that is, marriage is a contract and it supersedes all other contracts, even to some, in most extent, like sometimes trusts, right? So it gets, that ship has already sailed. So you might as well get the tax benefits around marriage. That's why if you're married filing jointly, not always, but it tends to be more tax beneficial for you. So it's just, you might as well do it anyways.
Yeah. So some of the ways that we like to involve spouses in business together, there's 3 different ways. So you can either add them as part owner in your business. Mm-hmm. And this doesn't mean 50-50, even though you're probably 50-50 in marriage, according to your state, especially if you're in community property state. But you don't have to make them a 50% owner of your business, just a partial owner. For the full benefits that you're probably looking for tax-wise, you're going to want to make them at least a 3% owner, because the IRS has a weird rule about being a 2% owner or more. But they can be part owner, they can be an employee of the business, or they can be on your board of advisors, board of directors.
Yep.
So the kind of 3 different benefits there. Obviously, the thing that gets all the benefits is being a part owner. So if you're going to do it, make them a part owner. And the reason being, like, now all of your business travel is a deduction. Like, we travel together all the time. So it's like, it makes sense that we're both involved in the business, right? Because then all of our travel, no matter where we go, is business related. It's a business deduction. Then we can deduct our airfare, our hotels, our meals, all the things. You can also get another business vehicle. So you need a car for business. I need a car for business. You wouldn't be able to do that if you were just an employee, or I was just an employee, because when you get a vehicle in the business and they're just an employee, it's taxable to the employee. So you wouldn't want that for a spouse. You don't want their use of the vehicle to be taxable. That would just make no sense. So if you are wanting another business vehicle, it makes more sense to add them as a part owner. You also get the most amount of retirement benefits when you're part owner as well. So for things like cash balance plans, solo 401ks, safe harbor 401ks, profit sharing, all of those, most benefits when you're part owner. So we also chat through with our clients, okay, do you want to contribute more to your retirement? How much do you want to contribute? And that goes into the tax plan as well. And then, like I mentioned, the third option would be a board member, whether it's a board of advisors or board of directors.
Yep.
We also like this for the kiddos too, because your business has to have a board. Legally, you have to have a board, even if it's just you're the sole board member, and you have to have an annual meeting at least.
Yeah.
If you didn't know that. Some of you probably listening are like, oh my gosh, we have to have that. Don't worry, we have a board bundle. You can get it on our website, and it'll tell you all the things you need to add your board, how to do your annual meeting, topics that you should talk about, all the deductions available when you have a board. Like, we like to add like a best friend or spouses or kids or, people you travel with a lot, because then you can travel to your board meeting and have it be a deduction. But if you add your spouse to your board, again, you get to travel to a cool place. There's nothing that says you have to have your board meeting in Alabama. You could have it in Paris or the Bahamas or New York City or wherever the heck you want. That's why it's so important to have people on your board that you're going to travel with a lot.
Yeah.
So that way you can get more deductions. Now, a board of advisors versus a board of directors, again, you can see all of that explained in our board bundle as well. But that's how we like to involve kiddos and spouses in your business. And there's just so many other ways as well. So not only are you going to save money in taxes, it'll help you build wealth. It'll help with your succession plan in your business. Yep. And if you enjoyed this podcast, you definitely have to listen to and sign up for our next free masterclass in May, all about how to build family wealth, because this is just scratching the surface.
100%. Who is it? The owner of Louis Vuitton has employed all of his children, right? And obviously his children are grown, but
he just appointed one of his sons as CEO of one of the brands.
But how he had to develop him to the point that where he could be a CEO. Mm-hmm. And you're not going to, and her and I joke about it all the time, but he definitely was employing tax strategies every year. And he engaged his children in and he taught them business. And so you just have to realize that you can do the same things that the ultra wealthy do. Mm-hmm. You just have to think bigger. And on top of that, the wealthy talk about taxes. There's nothing wrong with being poor because I've been poor. But poor people tend to be afraid of taxes, whereas the wealthy are not. And that's the big difference.
I always say at parties, people need to be talking about taxes and retirement. And I know that that sounds so boring, but like it's stuff that we all have to talk about. And it's also like, how are you going to know who to go to if you're not going to talk about it with your friends? So thank you for listening to this podcast. Matt and I will do more of them together as well. And I'll see you at the free masterclass. Thank you for listening to this episode of Life Changing Money. Don't forget to subscribe, and I would love if you left a review and shared it with your friends. See you next time.